Um, Hello everyone, and thank you for EuroAsia in organizing this conference and give me the opportunity to present my research. My name is Ibrahim Tahat, and I am a PhD candidate in my final years at the University of Page, Faculty of Business and Economics, Hungary. Uh, I am an investment professional with over 10 years experience in evaluating and examining investment opportunity for large scale project and startups and from renewable energy and large infrastructure project and foreign direct investment into Jordan. Today I'm gonna talk about my recent research and which is examine the association between factors likely to have influence in multinational corporation MNC afterward foreign direct investment evidence from Jordan. Uh, Jordan economy. I'm gonna talk to you about the introduction about the Jordan economy. Jordan economy is classified, as an emerging economy when it's studied regarding its GDP. And Jordan economy is the smallest in the Levant region among, Lebanon, Palestine, Syria, and Syria with a limited natural resources. And Jordan economy experience since 1970 up to date multiple event that majority of them the case the economy to shrink and challenges from the spillover of the social unrest and political unrest and wars in Syria, Iraq, and Lebanon and Palestine. So, and the objective of this research to study the collectively these factor impact in attracting foreign direct investment into Jordan, and how would the multinational company consider this factor as a barrier, or collectively how they evaluate them in deciding to invest in Jordan. A Jordan economy fact sheet. Jordan economy is ranked around 58th in terms of the GDP side worldwide, and the GDP per capita is around 40,000, and the export share of our GDP is 1.14%. 14 million annually up to 0.6% worldwide, and mainly we export manufacturing and chemical and mining product plus foods and livestock. And the structure of Jordanian economy, it's mainly rely on the service, or roughly 67% of our GDP is a service, and we due to the lack of natural resource, and in comparison to our counterpart and regional country, we we experience a very slow growth, and this growth in the annualized real GDP per capita growth. And if we look between the period from 2000 to 2008, we in Jordan were leading the economic growth in the region and across the Middle East and North Africa. But after 2008, which is the financial crisis, the recovery of Jordanian economy were very slow in comparison to our, to the other regional countries such as Egypt and Morocco, where they continue to grow their economy at faster pace than Jordan. The only country we outperform is only Iran and Lebanon, which are experiencing more tough conditions, different than Jordan. So moving to the factor that influencing the choice of location and investment decision for the foreign direct investment. The literature site, collectively there is an economic condition factors such as per capita income, inflation, and infrastructure, aggregate tax rate, and market potential, and more important, political and legal condition, political stability, regulation equality, and the rule of the law, and control of and corruption, and freedom and investment freedoms. Also, there is social and cultures factor, which is mainly uh, involve the population growth rate, which we'll talk deeply in this into term for the unnatural or unusual population growth rate in Jordan due to the influx of refugee, sales and marketing, and production. And also in the paper, I explain, within Jordanian context, the electric paradigm of Tunning 1981, where it's mainly regarding the investment from three advantages. It's the ownerships, location, and internationalization. So if the company is own has an ownership advantage, such as for example Mercedes and BMW, where they have this trade and brand advantage. Location, does the location offer competitive advantage as a source of raw material, special tax, or low wages. Internationalization, do they think the internal or outs sourcing, does the country has an access to the regional or regional or international market that give it an advantage over other location when they elected the location. And also I came across the hosted culture dimension, which has large influence in multinational in MNC foreign direct investment. The hosted culture dimension is referred to the conceptual framework that identify the difference in culture globally, and it is show a systematic process to compare the nation based on belief, value, behavior, and attitudes. And the higher the power distance refer to the society where less powerful people are easily accepted the unequal power distribution in the community, which mean the acceptance of the inequity between high and low states members in the society, where lower power distance refer to the culture where less powerful people do not accept an equal power distribution in the society easily, which means the acceptance of equity and equality between high and low state members of the society. Here is come some an actual measure from Huddersfield index, which is give Jordanian about 70% in power distance, and 70 point and 30 point in individualism. So we are collective societies. Municipality 45, uncertainty and avoidance as 65, which is considered high. A long-term orientation 16%. So there is a rapid change, and indigency 43. Research methodology. The research adopted a quantitative approach in my paper, where I examine the correlation amongst factors. So a survey has been distributed to the sample of the study. The majority of the sample of the study, or most of all of them, are foreign direct investment in Jordanian companies from Amman Stock Exchange. It has been verified and checked across all the company, and we selected that company had more than 40% of their capital from FDI, and the samples company also from across Jordanian economic sectors, service, manufacturing, and industry. We come up with the 26 non-listed company, 31 respondent to the from the total sample of 50 company operate in Jordan, and the variables group in the survey questionnaire will mainly from the previous literature has been identified and agreed upon, and in potential market size, potential economic growth, and potential stability, tax and tariff, and cultural distance. And the result of the correlation among these factors indicated there is a strong correlation between economics and political factor, which which bring us to the main point and conclusion of the research, that political stability in the hosting country might lead to either decline or increase the profit, sale or export. Second, the production might also face a problem in case of the political unrest, and as we can see from the diagram, that this is a practical example about what's happening in Egypt when the Arabic Spring start in 2010 and 2011, and we can see the foreign direct investment inflow into Egypt that fall to the negatives numbers, and after the a new regime came into power, start to pick up again and regain the inflow. So the political events in the region, and specifically such a case in Jordan, and it's one of the major influence over the FDI. The research finding of my study is resulted in the mixed view among the multinational company, because the current situation and the research demonstrate that location decision is immensely influenced by economics and political factors and are integrated, and there's high correlations among those two factors. Here is the end of my presentation, and thank you for listening, and I hope you have cited information about the foreign direct investment into Jordan. Thanks again for listening.